Nema, it's Monday. Good place to start and get an update on exactly what's happening on the currency out there. We run about 775, pretty much tracking sideways on the day. What are you expecting from the rest of this week, especially in light of all the economic data flow, as Jeff Gable has just alluded to?
Well, Bronwyn, the rand has been quite stable today at 775. It has considerable downside momentum on it, but given the barrage of data that we're faced this week, we could see some volatility. New home sales coming out at 4 o'clock, also providing some impetus, weakening the dollar slightly, but still the rand staying stable.
New home sales better than expected, though, and of course that reducing the levels of risk aversion out there, net positive for emerging market currencies like the South African rand.
Yes, we've seen a series of quite fortunate events over the last few days, and this has allowed the rand to rally and to continue to move beyond these technical levels and allow it to strengthen somewhat. So today was just on the back of positive data that we have been receiving. German IFO data coming out last week Friday, positive European data coming through, economic sentiment surveys off of Europe and the US. But we always were quite wary of the fact that we have quite a bit of data locally and abroad. Also, we've got US GDP figures coming through this week, and there's always that one pivotal piece of data that could turn sentiment.
Are you expecting US GDP numbers to surprise on the downside and hence reverse all this positive news flow out there?
Well, we're within quite a cautious period between your second quarter and third quarter. The second quarter number could still show a deterioration, a weakening within the US economy, possibly not as bad as fourth quarter 2008, first quarter of this year, but we'll still see that inherent weakness coming through. Whether or not it surprises to the top side of the bottom or the bottom side remains to be seen, but it's obviously perception around that and how investors perceive that piece of information that could turn the market.
What could we see pushing the rand stronger? Sentiment aside, risk aversion aside, is it all about deal flow? Now, if we see we've got 31st of July looming very close, and of course we should have some clarity on MTN, Bharti, Airtel, that may be the driver to higher levels on the local unit.
The rand has been well supported by portfolio flows, and I think we've received boons in terms of foreign direct investment throughout the course of this year. And yes, we do have Thursday looming, and the detail around that deal also in terms of sentiment might buoy the ZAR and possibly flows arising from that. But just generally, I think we have had quite positive global data that has been providing support to the rand, providing it with this momentum. So we could see possibly more from that perspective, supported by portfolio flows. It's more a mix of factors than one specific event.
We tend to focus a lot on dollar rand. Let's look at the euro rand, of course, our major trading partner, and a lot of exporters focused on that exchange rate. Are we stronger against the crosses in general?
Indeed. Obviously, with the rand strength, we're going to be slightly stronger on the crosses in terms of euro rand, in terms of sterling rand, but we haven't seen the volatility in the euro as such, in the cable or sterling as such, to make it move, greater than expected. So it's also been quite stable throughout these few days.
Again, I think that your view at Rand Merchant Bank differs from that of Absa Capital on the interest rate front. You are expecting another 50 basis points to come off in August. Is that the house view?
Well, not specifically in August. There is a possibility for a further 50 basis point cut within this year, and that would basically signal the end of the cycle from our point of view. Our view is basically based on quite a bullish forecast for inflation towards the end of this year, going into next year, relative to market consensus. And then that is why we definitely see that there is still a slight possibility for a further cut.
7.3% consensus on a CPI come Wednesday. Where do you lie in relation to that consensus figure?
Rand Merchant Bank's forecast for CPI for this Thursday, or for this week rather, is 6.9%. So slightly bullish relative to the market. We obviously see this decelerating trend continuing. We're coming off positive base effects from a food price inflation perspective, from a fuel perspective. So we see it moderating slightly more than the market does, but obviously this plays into a longer term picture. It'll still stay elevated above the basket in our view, but towards next year, toward the end of next year, we see it coming back inside the basket.
And producer price inflation, can you give us your take on where you're expecting that to come in?
Pardon?
Producer price inflation.
Producer price inflation. Obviously, the numbers will post negative once again, and what we've seen is that this is as a result of lower commodity prices. So that's feeding into your PPI numbers, but not necessarily translating into your consumer price index. And we've seen that historically there's been sort of a breakdown in that relationship. It's not sort of closely correlated as it used to have been, but we obviously see those numbers posting a bit lower.